Hi everybody, and welcome back to the fourth video in this Ignition series. There is a lot of things we've brought up, and let's see if we can put it all together and help this make sense so that you can apply some of these principles in trading in the right direction, finding some good trades, making some money at the Forex market. Okay, so in putting it all together, let's discuss a couple of things here. The questions we always need to ask before every trade is, what is the trend? Now, we've talked about how to identify that trend. So what direction is it, up or down? If you had a checklist, these would be three wonderful items to put on the checklist. What's the trend, up or down? Where's my patterns? We talked about those patterns, double tops, double bottoms, rising wedges, falling wedges. Some of those patterns are reversal patterns. Some of them are continuation patterns. We need to know what those are, because if we have a downtrend but a big double bottom, that might be the end of that downtrend, and it might be time to trade a reversal and trade that up, and those patterns will be very helpful in identifying that for us, and I'll show you a couple of examples on the charts. And then of course we need to know where the key support and resistance levels are. As we spoke in the last video, if there's a established level and the market bounced off that and it's headed back up to it, are we going to try to buy into that trade before it reaches that level again? No, because that's a resistance level. We want to make sure that we're not just going to bounce off it and come crashing down. So we need to know where our support and resistance levels are. Remember, floor, ceiling, support, resistance, floor, ceiling. So we need to know these three things as best we can. Okay, we've talked a little bit about some of the indicators we use, moving averages. My charts contain pivot points and moving averages. Let me show you a little example here. Here's an example of a whole bunch of things, but this is that red moving average, and these are pivot points. Daily pivot points and weekly pivot points. These levels reset. The daily pivot point resets every day at the same time, and the weekly pivot point lasts for the entire week. Now, what pivot points are is they're like support and resistance levels, but they're calculated by the previous movement. So this isn't super important that you know this, but I'll give you a quick explanation of this. A weekly pivot point is placed here because of the previous highs and lows and close of the last week. So those numbers put together and put into a little simple calculation, which isn't too hard. High, low, and close divided by 3 is where our next level comes for this week. And basically what we look at pivot points as being is balancing points. If the market falls too far without pulling back and touching some of these pivot points, it can be a sign that the movement is too strong and that it's going to run out of ability to push further in that direction. We don't want to get caught in something. So you can see right here that this many times has pulled back and kind of hit these levels, but we have a few missed levels right there. And you can see that weekly pivot and that weekly pivot didn't get hit. So as these levels start to kind of stack up, that can tell us, hey, this downward movement might be running out of steam. But as we see some of these trends, it will just go, and they hit pivot point after pivot point after pivot point. Then those are kind of more sustainable trends, right? So that's just simply kind of a support and resistance level. It's automatically calculated on your chart. As I showed in the last video, you can just go right here to TradingView and type in pivot point standard, and that's what I use. I changed the colors on them because they come out a beautiful brown, but I changed the colors to make them blue and green and stand out on my charts a little bit. And I've got a pivot point indicator for MetaTrader as well that I will happily share with all of you guys. So these are a couple indicators I use. There's a lot more to talk about here with pivot points, but what we want to focus on is these three things we discussed. Remember, we want to make sure that we know where the trend is, patterns, support, and resistance. And again, I use pivot points and moving averages. So as we go back here and we see these pivot points right here, help us to kind of see if the market's going down or up in a steady pace, meaning it's pulling back and hitting these pivot points, or if it's just dropping like a rock, or if it's shooting straight up and leaving a bunch of pivot points that haven't been touched. And that can mean a market that is unstably going up or in an unstable way going down. So we want to make sure that we keep an eye on that. And then remember our moving averages. We're looking at the 1 hour, 4 hour daily charts. We want to make sure that we know what side of the moving average the market is, because that will help us determine that direction. Now, that's our pivot points and moving average. Now let's go back to these kind of 3 steps that we talk about here, and putting this all into an example. Here is the Canadian dollar. It's below the moving average on the 1-hour chart. It's below the moving average on the 4-hour chart. There's that 4-hour chart. We're below the moving average, and as you can imagine, we're going to be below the moving average on the daily chart. For a long ways it was below here, it came up, bounced around a little bit, and then it's back below. So that's a downtrend. So for a while there were some really great opportunities to trade this thing down. You can see this channel. We talked about channels. So this kind of started, it ran down, ran up, kind of established that channel high, and we're pretty much looking to just kind of sell this thing all the way down and short it all the way down and take advantage of selling, and taking that all the way down. But what did we talk about in the last video? When these channels start to break out, then there can oftentimes be some good opportunities that come after that. So if we're trading this US dollar Canadian dollar pair down, and then what happens? It ends up breaking out. And we talked about breakouts, right? And how these are important to keep an eye on. So this breaks out of our channel. It's been in it for a couple of weeks, bouncing, heading down. And then it breaks out, and it comes out, pulls back a little bit, makes a nice little run. So that's a good run. That's a chunk of pips. We're on a fairly short-term chart, and that is a nice little breakout of 145 pips or so. So 145 pips, to keep that in mind. If you have one of the really small trade sizes, we talked about mini lots or mini contracts, that would be about a $145 trade. If you have a larger account, you have a standard contract, that would be $1,450 of trade, and so on. And as you continue to stack those contract sizes on there, you can definitely see that there is opportunity to make some pretty good money on these breakouts. So then what happens? So we identified our channel, and is there a pattern that happens? And remember, a pattern is double tops, double bottoms, and so on. So this breaks out, runs up a little bit, but then it comes all the way back down. And this is a great example of all things that we've talked about. This was a news announcement. Look at this news announcement. This is why I tell people to, for the most part, stay out of news announcements. We had big spikes up and down over about a 2-hour period. Just spiky, and it never really kind of went anywhere. But what happened in the bigger picture? The bigger picture is we had a downtrend that hit. It broke out of this channel, telling us that downtrend might be starting to get over with. Starts to push above the moving average and get above that. And it pulls back down here, and what does it end up doing? This is a great example of another thing that we talked about, our pattern here. There is, try that again, there is that little low, and that little low, and that is a double bottom, and that is support. And what do we expect to happen from a double bottom? Hit, bounce, and an upward movement. So this might be a great opportunity to start buying this dollar Canadian. This is a nice little move, breaks out of the pattern, breaks out of the channel, creates a bullish pattern, meaning double bottom, and it starts to move back up. Now, one thing that we love to look at is as we start to see these movements in one direction or another, what do we look for? What are our targets? Well, markets love to come back to missed pivot points. And here are pivot points that have not been touched. This was created right here, didn't get touched. The market headed straight down. That one was made, never got touched, headed straight down. That one never got touched, headed down. We hit right there. We just missed right here, but this came back all the way over there and hit that pivot point. But then we have another weekly pivot point that has not been touched. So now, if we draw a line and just pretend like we extend that pivot point over, that's a missed level that the market's going to try to get back to. That's a missed level it's going to try to get back to. So now, as we've broken out of this channel, we've created a nice little double bottom, we're looking for reasons to get into an entry in the direction of that target and that target. And those are areas that we're going to aim for. Along with, these guys right there. There's a missed daily pivot, a missed daily pivot. That one, well, I guess technically that one was missed. It got pretty close to hitting it right there, but it never did. So we've got some really great levels to aim for up there. after breaking out of that pattern, making a double bottom, and starting to head higher. So it all starts with this downtrending movement that breaks out. And here's kind of our first little entry right here. We get into this guy and we trade as soon as it breaks out. And we start trading that up above. And where are we putting our targets and where are we putting our stop losses and all of that stuff? We're going to put our stop losses depending on what kind of trader you are, but typically we want to put our stop losses on the other side of something significant. So for example, here's a little support level right here. We want to put our stop loss below that so that if this pulls back a little bit, it has a chance of keeping us in the trade, even if we're in the negative a little bit, before potentially taking us out for a loss. Now we want to have a stop loss because that's going to keep us from losing more money than we need to, but it's a good area to kind of just get that protection, but it also gives us enough room to let the trade develop. And then we put our profit targets at some of these pivot points and some of these other types of areas of support and resistance. Remember, we need to know where support and resistance is. So there's support down there. Here's some resistance up there and some resistance here and resistance here. So that takes us into a nice segue of a topic. How do we identify support and resistance besides a level that's been hit multiple times? Well, what we want to look for is something that, if it's a resistance level like this one, let's just say this guy right here, that candle right there, that green candle, we want to make sure that there's at least 2 candles to the left and 2 candles to the right that are lower than that middle one. So we want it to look like that. So 2 candles to the left, 2 candles to the right that are lower. Support levels? What do we have for support levels? Well, here's an example of a support level. We want to have 2 candles to the right and 2 candles to the left that are higher, and that's our lowest one. So that's a support level, and that's a support level and a support level, and oftentimes when these start to coincide, we can find some really great targets and really great areas to start trading a breakout. So for example, you can see here is our channel downward movement. There's our channel. This has been tested multiple times. Here is a resistance level, because look at this guy right here, right? And that's a weekly pivot point right there, but don't pay too much attention to that yet. We had 2 candles to the left, 2 to the right, so that made a nice little resistance level, and it came back down, and it hit it again, and it had a couple of candles to the left and a couple of candles to the right that were lower. So now we're watching that little area, and we're saying, I'm going to buy as soon as this thing gets up above. And what does it do? Breaks out of our channel, gets above that little resistance area, and it starts to head higher. Now, this is a very brief overview of how we're going to find entries, but it's this kind of stuff that we want to look for, and it just goes back to the simple question of what direction is the market going? What's our trend? Where's our patterns and our channels? Where's our support and our resistance? And then we're going to trade breakouts. We're going to trade reversals. There's a whole bunch more to this, but I don't want you to worry about that too much. We're going to talk about all of that in the next course that's coming up. So hopefully that gives you a little bit of an overview of how we're going to look at all that stuff. Again, pivot points, moving averages, other indicators you may have heard of and you might even be using: Bollinger Bands, MACD, stochastics, RSI. You might be using divergence, which is a form of indication from one of these other indicators here. So those are great. I don't use them that much, but they're very popular, very common indicators that you've probably heard a lot about, and there's a lot of good stuff on them. To summarize all of this, indicators help us find trend. So the moving average, pivot points, other indicators help us find trend. They're very powerful when they're used in conjunction with patterns and price action. And by price action, I mean, those patterns and channels and double tops and double bottoms and so on. We need to review the daily, 4-hour, and 1-hour charts to determine that trend. Because remember, we must know the trend, channels, patterns, support, and resistance. We've got to know all that stuff. And then we're going to trade according to direction, patterns, and support and resistance. So when we can put all that together, we're going to start to find some really, really good trades. So I hope this was helpful for you. Please don't hesitate to ask any questions whatsoever. This is an overview of how we're going to tiptoe our way into the market, start to find some setups, and get a little bit of awareness of how this is all going to work. I've got much more advanced material that you can have access to, and I'll show you how to get a hold of all of that. But this is a good reminder and a good review of some of the things that we need to look at to make sure that we're properly getting ourselves into the market, and that we're not doing or missing important things that we need to pay attention to when it's time to trade. I hope this was helpful. Thanks so much for watching. On to the next.